first here, I want to start off with the moves by Uber. We've been watching them try and make good on their target for profitability by the end of next year, at least on an adjusted basis. And they are taking some steps to address that by selling off their self-driving car unit to a Silicon Valley competitor. That would be Aurora Innovation. It's a pretty interesting move here since we've seen them stress kind of their leadership position, or at least some of the moves they've been making in that autonomous space. But at least here, I guess, if you believe the move, taking a stake in that company by shedding their own efforts perhaps could be one way to address the profitability goal and also not completely exit the space entirely.
Yeah, and if you look at the share move, this you could say it was largely expected here. The share is up about 0.5% right now. To your point, Zach, we have seen CEO Dara Khosrowshahi really aggressively try to trim the fat, if you will, of the company to really focus and double down on the ride sharing element as well as the food delivery side of things. And this seems to be another step in making good on that. When you look at the numbers, though, I mean, this is a pretty expensive, or has been a pretty expensive endeavor for Uber. $2.5 billion spent over 5 years. In addition to selling off this unit, they're going to be investing $400 million in Aurora. So sure, you could say that the technology, they can continue to invest in the technology, but Uber really trying to cut their losses right now as they get to profitability. And I think it's worth noting that this is really just the latest step for Uber in what has been a pretty aggressive move to acquire some pieces, to build out their food delivery, and then really cut off some of the losses. I'm looking at, for example, the acquisition of Postmates, which we talked about earlier in the year. They also sold Jump Bike, a scooter rental business. They also acquired globally a grocery delivery company in Latin America. They sold Uber Eats in India. So, I mean, there's been a number of activities that Uber has been looking to try and really focus on their bread and butter. What they have seen is their big growth spots. And this seems to be, at least investors seem to think this is a good move.
Yeah, on the whole, critics might point out and say, look, this just kind of looks like some more financial engineering. If you're going to put $400 million into this company, take a 26% stake, still watch it play out. It'll help you on your profitability target, I guess, if you look at it that way. But it is interesting because, the numbers are $104 million, the loss in the third quarter. You're talking about Uber Eats in terms of that not necessarily being profitable right now, but still tied, I think, to their overall push in maintaining the focus on just the rides, Uber rides, and how they've really been trying to grow that business in the pandemic, or at least stem the tide in terms of the pressure we've seen on that. Overlooked in all this, though, I think too. I mean, it might be one of the most overlooked stories in the autonomous space was just kind of the pressure there. And Anthony Lewandowski and what happened there and kind of moving over to Uber. It's kind of what it'll be known for in that kind of drama that played out since he was, charged with stealing those trade secrets from Google. We don't see a lot of these cases come in spaces like this, but it was a very interesting thing to see play out. But clearly, I guess the focus there shifting again to profitability and what could play out. And of course, when we talk about Uber Eats, we're going to get the update, as I said, later on the show, how much investor demand is around DoorDash, one of the big competitors there. They completely took over that space. We'll get into that later.